Hello guys, welcome to XM live trading session in the beginner's room for the chart patterns and candlestick formations with me. My name is Junaid Vahid, trader analyst in Forex and Structure. Started trading back in 2011. And today we're going to talk about the chart patterns, the candlesticks, formations, and all of your questions. If you have any questions related trading, investing in the financial markets, strategies, anything, feel free to discuss it, share with me in the chat. Drop your comments. I'll take it seriously and I'm going to answer it the best possible way. We have new drama popping up here and there, which is just a second. It's crazy. Which is super important, I think, not only for the financial markets but also for um, the general situation in the world economy and the geopolitical developments. Taking into consideration the potential war, actually it is war maybe, between India and Pakistan, that could shake up a lot of the markets and we can see interesting moves. If that development continues to arise, I hope not. I hope things will get better, but it doesn't look like. We need to keep an eye. This can hit markets also because that's going to increase the fear among investors in the region and also global investors. Probably depends if there will be somebody to involve with it. So it worth to keep an eye. And the more from these, the more uncertainty on the markets. So I'll start with what we learned on the chart patterns and candlestick. Basically, it's price action. We learn different chart patterns and we learn what are they and how we can interpret them and recognize them on the charts and how we can trade them. Most importantly, because recognizing them, it's not the only important thing, but to be able to trade them, to know how to trade those chart patterns using different trading strategies. Also want to say big hello to all our YouTube viewers that are currently watching the session. I'm inviting you guys to join our XM website and watch the stream, full stream there. All right. Okay, I'm trying to also check all the comments to be prepared. All right, I'm also in the chat section to see if there are any comments and questions about chart patterns and candlesticks, price action overall, and the general situation of the world, because it's quite fundamental world. We are learning technicals here, but those technicals, greetings, Mr. Dargo says, this is on the advanced room. Darek is there in the beginner's room. We have, hello, Mr. Wahid from FOAT. How can you make money? Okay, Mikhail is also here. Big hello to FOAT. Looking forward to your comments and questions, guys. Feel free to share anything you are interested in. I'll be happy to answer. So I'm going to pull the chart a little bit to the left side, and I'm going to explain the logic of candlesticks, chart patterns, and reading the price the best possible way, so to be able to trade it. Why we need to learn those things? Because this, what we see on the chart, it's called candlesticks one by one, and we are on the daily chart. So every single candlestick here representing one trading day, full trading day. And when we are checking these candlesticks one by one, we can understand what happened during that day. And the cumulative information that comes from multiple candlestick analysis gives us the information about that context of the market. Are we in the bearish trend? What's happening if there is a pullback? We are in the corrective mode, trending mode. What basically is happening on the market? We can understand through price reading using candlesticks, bar charts, line charts. The best information that we are getting is from the candlestick charts. Candlesticks are giving us best information, actually same information in the best possible way. In the line charts, do we have them here? Let me admin. In the line chart, we basically have only one line that we can see only the closing price. We don't see the full information about the entire day. The reason for that is because not everybody needs detailed information about every single day, what happened on the markets, on the price. Most of long-term investors and traders are looking for the original direction of the market, not all the details. Like if the direction is bearish, if the trend is curving up, getting bullish, or what is the case. So that's what they need. When there is a bar chart analysis, bar chart is giving the same information as a candlestick chart, okay? So the bar chart looks like this. The market opens here, during the day drops down to the lowest levels, goes up to the highest price during the day and closes here. So this is opening price, lowest of the session price, highest of the session price, and closing price. So this here, basically from open to close, it's called real body, okay? But it's not, you cannot recognize it so much in first look, because at first look, you see the entire bar, but when you have, imagine you have a lot of those, it's not visible exactly which bar is, if it's bullish or bearish, if it's doji, and what information is giving you. You still see the direction with some more lines there that if you focus, then you might recognize something. So in order not to really push yourself to understand if this is bullish, bearish, or what is it actually the bar chart representing as an information, you can switch to the candlestick charts, which comes from the Japanese guys, created from rice traders long time ago, in order to be able to analyze what the rice price is doing for the day, for the week, for the month, so they can analyze and trade it. So this is the same information as on the bar chart, just how it's giving this information. You see, we have a real body. We have some wicks here, candlestick wicks, sometimes from the upside, sometimes also from the downside. There is a color, two colors on every single candle. The two colors are representing bullish and bearish markets, or buying and selling pressure. Okay, I'm going to do it like this. If it's going to be bullish, opens here and closes higher. Bullish means upward trend. If it's going to be bearish, opens here and closes down. With other words, we can do like this. This is bullish candle, open here, closing here, high of the day, the low of the day. Okay, so bulls or buyers managed to buy from the dip and push the price all the way up and close it at this level. Even though they managed to push it higher, the price came back and closed here. At some point during the day after it opened, market spiked down, made the lowest low, and then started to go up, made a highest high, and close up here. So this is representing up day, bullish day. So here, bulls are on charts. They are the strongest during this session. If we have the opposite, okay, which is in this case, red I'm drawing with my red color. In the chart, I have black. Some people are using different color for different market participants. Let's say for bulls, often we are using red. Sometimes we are using black. Sometimes it could be used any other color. Purple if you want, I don't know. There are very different colorful charts that people decide to use. In this case, if we are having downside move, so this is upside move. If we are having downside move, let's say here, the open is here, the high of the day is here, the low of the day is still here, and the close is here. Okay, the market opens, jumps up, it fails to continue, crashes down, creates low, and it closes slightly higher than its low. This is called bearish day or bearish candle, depends on the time frame, and the pressure is for a downside. Here, bulls are winning this session, bears are winning this session, or bulls are in church here, bears are in church here. So that's how we can interpret it. Just by open the chart, I see bears won here, bears won here, bears won here, bulls barely won here, very small candle, bigger wicks upper and lower, and we have small real body. Bulls are not as strong here, okay? Still, they didn't manage to push it up, you see? Then bears are strong. Bulls tried to wake up here, but not so much, not so powerful, and they got counterattack from the bears. Massive rejection from the bulls, okay? And the market slided down. Massive rejection from the bulls. They managed to send it up, but they got resisted from the sellers, and price closed near to the opening level, which is a high wave candle. Another bullish rejection, high wave candle, big bearish close, doji bullish pin bar. That's usually considered to be Bullish signal, it depends if context allows it, but it's in isolation, this candle is mostly bullish than bearish because bears didn't manage to hold the price low. Bulls managed to retrace it all the way back to the opening price. So if the context suggests, we will have a more bullish oriented move here, but because the context was significantly bearish, the tariffs discussion, all the panic and fear, and the big bearish pressure early on the stage, so it's not so much bullish. And that was basically counterattack from the bears. And then we had some plateau. Sometimes you see a high wave candle, slightly bullish, bearish. The bulls for the first time became stronger in this bearish decline from the bears. You see, it's a bullish engulfing. That's the name of the pattern. So candlesticks have also patterns that they are forming, and they have names. Okay, Japanese guys created those candlesticks to be able to analyze the rice prices, so what the rice price do throughout the day, to week or month, as I said, but also the more they draw these candlesticks, the more they see that there are different shapes. And those shapes started to meaning something for them. Like sometimes when the price is changing from the downside to the upside direction, something is forming here at the dip, let's call it. Something is forming here that is signaling potential reversal. So this something often it's so-called today reversal candlestick formations. Those reversal candlestick formations can be bullish hammer, can be bullish engulfing, can be piercing pattern, can be bullish harami, morning star. Now we are going for a triple candlestick formation, morning star, um, bullish counterattack, and etc. There are more. And even the three white soldiers, if somebody remembers, still starts with potentially bullish engulfing or piercing pattern or morning star. So yeah, those are forming soon on almost every dip, if not every dip. When they might not form, if the dip starts with a plateau, dojis, spinning tops, you know, not a very nicely defined a candlestick, and they form a tight consolidation, which suggests that bears lost control. They can't push the price further more, and bulls are counterattacking them. So their supply demand dynamics are getting into in peace, let's say, in balance. So they are balancing. The more the sellers being met from the buyers with the same amount, let's say, and price falls into a sideways market, or just the sessions are low. There is not much interest from shorting, and bulls are seeing that, and eventually the buyers are taking over the bears, the sellers, as the market was declining, and buyers are managing to create the first strong large candlestick to the upside, which opens up the door for short-term reversal or entire trend reversal. Depends on, again, the context. Context is very important because single candle cannot give you the entire information. That's very strong, powerful reversal candlestick formations, bearish engulfing, or evening star if you want to call it. But I will suggest let's stick to the bearish engulfing. Where that forms? It forms after prior bearish impulse that was corrected back with a channel flag pattern. So if this flag pattern basically forms a nice bearish engulfing with inside in the direction of the original trend, of course, that's a very strong bearish signal with high probability and great risk to reward, calculating the potential another swing coming. But before that, we have a support that we need to respect. So if price formed it, then it's market formed it. Our job here is to respect the previous support as one, because market can retrace back again from it. And there is chart pattern formation this time possible. So from cumulative candlesticks in the special places on the charts, sometimes the formations are forming very interesting, you know, um, patterns that we can see back in the history over and over again. And often when they form, there is repeated things happen after them. So if we have, let's say, double bottom, price tend to reverse the direction. When there is a flag pattern, price tend to continue the direction, and etc. There is something that those patterns are telling us. But in order to have chart patterns, we need to cumulative a lot of information from the candlestick. So it's a multiple candlestick formations forming the chart pattern, sometimes more than 10, 20, 30, depends on how big the pattern is. Well, if we manage to read the candlesticks, we will pretty much understand what price is doing by itself, candle by candle. But if you manage to put them in a kind of a context using the chart patterns, we are one step ahead pure candlestick analysis. So which means that we can easily call candlesticks alphabet of price action, the best indicator for judging the price action, which we call alphabet. And alphabet, it's letter by letter. It's a letter, uh, letter by letter. You have A could be pin bar, B could be bearish engulfing, and etc. So if you know the entire alphabet or all the candlestick formations, you will be able to potentially learn how to read the price.